Today we need to talk about what may be the most important technical setup silver has shown all year. Right now, silver is pinned just below the 100-day moving average. It has tested that level more than once. It has failed more than once. And now, once again, price is sitting right under it. That makes this week critical, because this is the kind of level that can decide the next major move. Either silver finally breaks through, confirms the base, and opens the door to a stronger rally, or the bulls run out of momentum at this wall and price rolls back down toward levels many people are not prepared for. And while that is happening, gold just exploded higher in a single session. The US dollar is weakening. Treasury yields are elevated. Oil is surging. Middle East tensions are heating up. And a silver royalty company just posted record revenue that more than doubled year over year. These are not random headlines. These are connected forces, and right now, they are all converging on the exact same moment in silver. So today, I am going to break this down step by step, both the bullish case and the bearish case, so you can see the full picture clearly. And before we go further, drop a comment below and tell me where you are watching from. Are you in the US, the UK, Canada, India, Australia, the Middle East, Southeast Asia? I always like seeing how global this community is. Now, one quick reminder for anyone new here. I do not sell courses. I do not sell signals. I do not sell mentorships. I do not sell paid memberships. So if anyone contacts you pretending to be Bridgeport Finance and offering paid services, block them immediately. That is not us. That is because this channel is built on one thing: clarity over hype. I do not sell fear. I do not sell greed. I do not sell fantasy. I give you the full picture, both sides, so you can make better decisions for yourself. Now let us get into silver, because the chart is speaking very loudly right now. Silver has actually held up better than many people expected in a very difficult macro environment. Price managed to stay above the recent low, and the bounce from that support area is starting to look more like a real base than just a dead cat bounce. That matters. And that view got stronger when silver broke above the late January downtrend line. That downtrend break is not a small detail. It tells you bearish control is weakening. It tells you sellers are no longer moving price lower as easily as before. It tells you the structure is shifting. But here's the problem. The bulls still have one major obstacle directly in front of them: the 100-day moving average. And this is where most people get trapped, because they see the downtrend breaks and assumes the move is already confirmed. Not yet. Silver has already failed at this moving average multiple times. Every time price gets there, sellers show up. Every time price tries to reclaim it, it gets pushed back. That means the market is sending a very clear message: this level matters. Until silver breaks above it and stays above it with conviction, downside risk is still alive. So let me show you the clean setup from both sides. If silver can break above the 100-day moving average with real follow-through, not just a quick wick above it and a close back below, but an actual sustained break, then the bullish case strengthens fast. In that scenario, the upside targets I am watching are 78, then the 50-day moving average, then the March 10th high near 90.50, and above that, resistance near 96. That is the bullish path. But if silver fails here again, the trade flips. Another rejection at the 100-day moving average would strengthen the bearish case. In that scenario, downside targets come back into focus. First, 72, then 68, and below that, the major support zone around 64.10, where the uptrend line and horizontal support come together. That area is the line in the sand for the bulls. If that zone breaks, then the whole base structure starts to look a lot weaker, and the chart changes in a big way. Now let us talk about momentum, because the indicators are starting to shift, and that matters too. The RSI has been moving higher and is getting closer to the neutral 50 zone. That does not mean silver is suddenly in full breakout mode, but it does tell you selling pressure is fading. That is important. At the same time, the MACD has crossed above its signal line from below. It is still in negative territory, yes, but it is showing that momentum is improving. So the message from the oscillators is this: the bears are losing control, but they have not completely lost it yet. That is why this level is so important. The easy short side may already be behind us, but the long side still needs confirmation. And that brings us to the bigger picture, because silver is not trading in a vacuum. Let us talk about gold. Gold just made a massive move higher in a single session, and that is not normal. When you see that kind of move, you are usually looking at some combination of safe haven demand, institutional repositioning, macro fear, and quarter-end flows. And right now, we have all of those ingredients in play. Geopolitical tensions in the Middle East are pushing investors toward hard assets. Bond prices have been under pressure. The dollar has weakened. Treasury yields remain elevated. Oil is surging. And today also marked the final trading session of the month and the quarter. That last point matters more than many people realize. Quarter-end positioning can create oversized moves as funds rebalance, close old positions, clean up books for reporting, and start preparing for the next quarter. So gold's big move may not be just about headlines. It may also be about serious money repositioning. And if that repositioning continues into the new quarter, that becomes a real tailwind for the metals complex. Now, on the gold chart, the key levels are also very clear. The bulls want to push above major resistance near 4,750. On the downside, the bears would want to see price move back below the March low near 4,100. Near-term resistance sits around 4,700 and then 4,750. Support is around 4,500, then near 4,444.70. So if gold can hold strong after that surge, it helps silver. If gold gives the move back quickly, that becomes a warning sign for silver too, because gold leads and silver usually follows. Now here is the part that most financial channels are barely talking about. They are so focused on the chart and the paper market that they are missing what is happening inside the actual silver business. Silver Crown Royalties just reported audited financial results for the year ended December 31st, 2025, and the headline number was strong. Record revenue, more than double the prior year. That is not a small jump. According to the company, revenue was driven mainly by minimum payments tied to silver ounces under royalty agreements. And they directly linked that revenue strength to a major improvement in the macro outlook for silver, with silver prices rising dramatically during the fiscal year. Think about what that means. A royalty company tied to silver sees revenue surge. Management describes the year as formative. They position for aggressive growth in 2026. They hold cash and silver bullion on the balance sheet. And instead of pulling back, they go out and acquire more royalties. That tells you something. It tells you that informed players inside the silver space are positioning for a stronger future, not a weaker one. Now let me be very clear. I am not telling you to buy this stock. That is not what I do here. I am showing you what the smarter money inside the sector is doing. They are expanding. They are acquiring. They are holding silver. They are deploying capital with confidence. That matters. The company also highlighted royalty acquisitions in Peru and Nova Scotia, and those deals were structured around future silver production and minimum payments. In plain English, they are placing real bets on silver output and future demand. That is a fundamentally bullish signal for the sector. But again, we always look at both sides, because there were also real challenges in the portfolio. The company recognized expected credit losses tied to one royalty. Another operation was halted because of financial issues. A separate project saw a full impairment after progress stalled. That is the reality of mining. Even in a bullish metal environment, operational risks do not disappear. Mines can shut down. Operators can run into trouble. Projects can be delayed. Some assets do not perform as expected. So yes, the revenue growth is impressive, but the risks are also real. That is why I always say the same thing. Do your own due diligence, understand what you own, and know the risk profile. Now let us zoom out again, because the macro setup around metals is getting intense. Middle East tensions are rising. And historically, when geopolitical fear increases, gold reacts first. That is exactly what we saw. But here is the nuance people miss. Safe haven moves can reverse quickly if tensions cool. If diplomacy unexpectedly takes over and the market starts pricing in de-escalation, some of that fear premium can come right back out of gold and silver. But if tensions get worse, the metals could move fast. Gold could push toward major resistance. Silver could finally get the catalyst it needs to break that 100-day moving average. So now we have the chart, the macro picture, and the fundamental silver business all pointing to the same question. What happens next? Before I lay out the full bull and bear case for the coming week, let me ask you this. If you are getting value from this analysis and you are not subscribed yet, consider subscribing, please. I am not here to do gimmicks. I am not here to scream at the camera. I am not here to feed you fake urgency and shallow talking points. I am here for people who want real analysis, real context, and real clarity. If that is you, subscribe Bridgeport Finance channel. Now, let us walk through both scenarios. First, the bearish case. Silver has already failed at the 100-day moving average several times. Every failure makes that level stronger. Every rejection tells traders that sellers are still defending that area aggressively. So if silver gets rejected there again this week, a lot of traders who chase the downtrend line break could get trapped. That matters because trapped longs often become forced sellers. And once that selling starts, price can unwind quickly. In that bearish setup, 72 becomes the first key downside area. If 72 fails, then 68 comes into focus. And if macro conditions turn worse for metals, then the 64.10 support zone becomes the major test. And yes, there are macro risks too. If oil keeps rising and starts triggering broader growth fears, that could create risk-off stress across markets. If the dollar suddenly strengthens, that could pressure metals. If gold gives back its gains and starts consolidating lower, silver could underperform even more. And from a momentum standpoint, the warning signs are still there. RSI is approaching 50, but it has not crossed decisively higher yet. MACD has improved, but it is still below the zero line. So if momentum rolls over here, the whole improvement story starts to look premature. Also remember, quarter end is over. New quarter positioning begins next. And if large funds decide to cut metals exposure instead of adding to it, that is a source of selling pressure. So the bearish case is simple. Strong resistance remains intact. Momentum is improving, but not confirmed. Macro risks can still flip quickly, and silver has not yet proven it can reclaim the level that matters most. Now here is the bullish case. The late January downtrend has broken. That is a real structural shift. Silver has also started printing signs of higher lows and a reversal attempt from a defined support zone. That matters because trend reversals do not begin with perfect straight-line breakouts. They usually begin with exactly this kind of behavior. Downside momentum fading, support holding, resistance getting tested again and again, and sentiment still divided. On top of that, RSI is rising. MACD has crossed higher. The recent support zone has held through multiple tests. And every successful defense of that zone makes the base more credible. Then add gold's major surge. When gold leads, silver often catches up later. And if the gold to silver relationship starts to normalize, silver could outperform on the next leg. Now add the weaker dollar. A softer dollar is typically bullish for precious metals because it lowers the cost for international buyers and tends to increase demand. Add elevated oil. Higher oil can reinforce inflation fears, and inflation concerns tend to push investors toward real assets like gold and silver. Add yields. If inflation expectations rise faster than nominal yields, real yields can fall, and falling real yields are historically one of the strongest tailwinds for precious metals. Then add the physical side. A royalty company tied to silver just doubled revenue and is aggressively expanding. Management is positioning for higher future output and higher future value. They are holding silver bullion. They are not acting like they expect a major collapse. That is not hype. That is capital allocation. And finally, add geopolitics. If tensions remain elevated or worsen, safe haven demand stays alive. So the bullish case is also straightforward. The bearish trend is weakening. The base is holding. Momentum is improving. Gold is strong. The dollar is softer. Oil is elevated. Physical market signals are supportive. And silver may only need one strong catalyst to finally break through resistance. So where does that leave us? It leaves us focused on one level, the 100-day moving average. That is the battlefield. Everything we discussed leads back to that one level. If silver breaks above it and holds, the upside path opens towards 78, then the 50-day moving average, then 90.50, and possibly 96. If silver fails there again, the market likely rotates back down towards 72, then 68, then the critical 64.10 support zone. So here are the three things I am watching most closely this week. Number 1, how silver behaves around the 100-day moving average. Not just whether it touches it, but whether it can actually close above it and get follow through. A wick above and a close below is a trap. A clean close above followed by continuation is confirmation. Know the difference. Number 2. Gold's follow through after the surge. If gold can hold above 4,500 and build on the move, silver gets support. If gold quickly fades back towards support, that tells you the move may have been more about quarter-in mechanics than a true new leg higher. Gold leads. Silver follows. Number 3. Geopolitical headlines and oil. The Middle East situation remains fluid. Any escalation tends to support metals immediately. Any de-escalation can remove part of that safe haven bid. And oil is a signal too. If oil stays elevated or keeps rising, that tells you the market still sees risk. If oil cools off fast, urgency fades. Now I want to hear from you. What is your outlook for silver this week? Do you think silver finally breaks the 100-day moving average, or do you think it gets rejected again? Drop your view in the comments, and tell me where you are watching from as well. I always read the comments, and it helps me understand what this community is seeing in real time. And let me leave you with this. What we are watching right now is a collision between short-term resistance and longer-term momentum. On one side, silver keeps hitting a technical ceiling. On the other side, the macro backdrop is turning more supportive. Gold is surging. The dollar is weakening. Oil is elevated. Geopolitical risk is rising. The physical side of the silver market is showing strength. Momentum indicators are improving. The downtrend has already broken. So the short-term chart is saying, prove it. But the bigger picture is saying, something is changing. This is why these moments matter. Because this is where major moves begin. Not when everything feels obvious. Not when every headline agrees. But when the chart is at a decision point, the macro picture is shifting and the market is forcing everyone to choose a side. That is exactly where we are now. So stay sharp. Stay disciplined. Watch the data. Respect your time frame. If you are trading short-term, a rejection at this level matters a lot. If you are investing on a long-term thesis, then your position sizing and risk management matter even more. Do not get forced out of a good thesis because of bad leverage. Have a plan before the market opens, not after. This is one of the most important silver setups of the year. The base is forming. The resistance is real. The macro tailwinds are building. The catalyst could come at any moment. Now we watch and let the market tell us the answer. If you got value from this breakdown, subscribe to Bridgeport Finance channel, turn on notifications, and share this with someone who needs the full picture. Do your own due diligence. Understand the risks. Stay accountable for your decisions. Match your plan to your time frame. Thanks for subscribing and watching. And let us see what silver does next.